Dear investor, welcome again at Binck Café. As in the previous two editions, I've been using many times the word quantitative easing. Some of our clients, some investors have been asking, what does this basically mean? Where is this coming from? How old is this? Today I want to talk with you about the description of basically the word quantitative easing. Quantitative easing has been first implemented in 2001 by the Bank of Japan. The Bank of Japan basically throughout a period of 5 years pumped money into the Japanese economy. What they've done basically is they wanted to fight the deflation, they want to generate growth, and of course they also basically wanted to see if this works. This was the first time ever happened in history. After 5 years, we basically saw that it didn't do anything with the economy. The growth rate stayed the same, inflation didn't pick up, but still, they kept on going and going and going. And even now in 2019, Japan is still buying on a regular basis Japanese debt. Estimates state that they've put in more money, 3 times more money than the whole United States. However, the economy of Japan is 3 times smaller. So you can imagine the amount of money that Japan has been investing in getting their economy up to steam. Even though it didn't work in Japan, the United States, after the subprime crisis in 2008, copied basically what Japan has been doing. So they've started also a quantitative easing program. QE1, as it is also called. With QE1, initially they started buying mortgage-backed asset securities, such as Freddie Mac, Ginnie Mae, just everything they could their hands on, they added it to the balance sheet of the Fed. And why could they do that? Simply, there was no market. Nobody wanted to buy these specific securities. So the Fed jumped into this, and they started buying whatever they could buy. In 2012, QE2 was launched. How could the Fed do this? Simple. They did this because they had some benefits from QE1 and also they implemented their own money. What was QE2 about? QE2 was basically the Fed buying whatever they could buy of US Treasury to keep the economy at a stable growth rate. Did they accomplish with this? Yes, they did. They did succeed. The economy of the United States maintained its growth levels between 2 and 2.5%. In the next 3 charts, I want to show you what happened basically with the US economy over the last 11 years. In this first chart, you see the balance sheet of the Fed from 2008 till nowadays. You see that the debt has gone from 900 billion to nearly 4.5 trillion. In this second chart, you see the total US public debt has gone from 9 trillion to almost 20 trillion. So you see the price that they are paying to keep this economy stable has been enormous. In the last chart, you can see that the US domestic growth, the gross domestic growth, has maintained stable after the dip in 2008. Nowadays, we're basically in the phase of QE3. What is QE3? QE3 is not a specific program. It's basically a continuation of QE2. Basically, the Fed, the US government, is still buying, the US central bank is still buying more and more treasury. In Europe, we see the same thing happening. Initially with Mario Draghi, now in the future with Christine Lagarde, they also are buying European debt. However, not on the same scale as you see in Japan, as you see in the United States. The effectiveness of this whole program of quantitative easing is still to be tested because it's fairly new. It's only ongoing for like 20 years. So we will have to see what will be the outcome. For you and as an investor, it's always important to keep an eye on this. Thank you very much for watching this edition of Binck Café, and I hope to see you next time. Thank you very much.